One of the most important elements offered by most annuities is something that my granddad referred to as
Mailbox money.
So what is mailbox money and how can it guarantee savers an income they can never outlive? Well, here's my personal definition of annuities, and that's this wonderful stream of income we show right here. It's a contract between you and the insurance company, which, assuming you're purchasing a fixed annuity, offers you, the annuitant, a guaranteed return on your money, and most importantly, if you so choose, the ability to guarantee an income you can never outlive. So what I thought I would do today to talk about the pros and cons of mailbox money, more specifically what happens to the annuity when you begin your lifetime income, is to talk about these two types of mailbox money. So let's take a look at them. First of all, you have something called annuitization. Okay, this has been around over 100 years. We'll talk about the pros and cons of annuitizing annuity for mailbox money. And then we've got the more modern day annuities that came out in the mid-90s. So let's talk about annuitization. First of all, almost any annuity you ever purchase, in the contract of that annuity, it'll talk about the ability to annuitize that annuity. All right? The next thing is, if you do elect to send that mailbox money to yourself for a period of time, once you elect annuitization, you cannot change your mind. The next is, you can select a lot of different options. You can annuitize for your life, for the life of a spouse. You can do what's called a period certain for a number of years. So there's lots of different options to annuitize that annuity. But again, whenever that option is selected and income begins, you cannot change your mind. I like this, single joint and period stop. So with an annuity, annuitization, in most cases, there are no beneficiaries, no death benefits. You're trying to select how long the annuity will last and for which people it's going to benefit. Those would be the annuitants. And finally, I would say an annuitization is most like granddad's pension. As we can see here, full screen, here's my granddad's pension. And if you'll notice, his wife Hazel was mentioned as the annuitant. So when anybody says, well, I don't know about those annuities, well, if you've got a pension or if you know somebody that's got a pension, they've annuitized it, and therefore it is basically an annuity. All right, let's take a look at the more modern day annuities. Basically, a modern day annuity is something that attaches to itself an income rider. We're going to look at this in a minute. So an income rider is not annuitized. You're simply selecting income. So what does that mean? Well, basically, there's going to be two separate accounts. There's going to be something called the income value, which we'll show you in a minute, and then there's something called the contract value. So it's a little different than annuitization. Now, this can be used when you set up mailbox money for either you or your spouse, okay? Those are the only two beneficiaries. You can't get into period certains and benefits for kids. It's only going to be elected for either you or your spouse, okay? The next is the income value, which these can be humongous. They can have huge bonuses applied to them, large 7 and 8% guaranteed returns on them. Listen closely, folks, as we're going to see. The income value is not a real number. It is not going to be left to anybody. It is used to calculate your income, which leaves us with the final point. Because this is a rider and it's doing a lot of things the annuity was really not meant to do, there's usually going to be an extra fee for the income rider.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.